The United States is grappling with a housing affordability crisis, and a new idea has entered the conversation: a 50-year mortgage. Recently, the White House said it's considering backing 50-year home loans to help make houses more affordable. This would mean stretching the standard mortgage term from the usual 30 years all the way to 50 years. Why float such a drastic change? Home prices are still sky high, on average nearly 60% higher than they were before the pandemic. Higher prices, combined with recent high interest rates, have pushed the typical first-time homebuyer's age to around 38 years old, a record, and much older than the late 20s common in the 1980s. In short, buying a house has become much tougher for the average American. With housing costs straining families, the idea of a longer-term loan has popped up as a possible remedy. The concept gained traction when President Donald Trump and his team began mentioning it. Over the weekend, Trump even posted on social media under the banner 50-year mortgage, hinting at the idea. Bill Pulte, the director of the Federal Housing Finance Agency, wrote on X that, thanks to President Trump, they're working on the 50-year mortgage, a complete game-changer. FHFA oversees Fannie Mae and Freddie Mac, which back most U.S. home loans, so Pulte's endorsement signaled that this idea was being taken seriously at the federal level. To understand the appeal, consider what a 50-year mortgage does. It lowers the monthly payment by spreading the loan out over a longer time. For example, take a home priced around the U.S. median, roughly $400,000. With a traditional 30-year fixed mortgage at current rates, the monthly principal and interest payment might be about $2,300. Switch that to a 50-year term, and the payment could drop to roughly $2,000. In other words, you might save a few $100s each month. For cash-strapped buyers, that kind of breathing room in the monthly budget sounds enticing. But of course, nothing is free. Those lower payments come with a big trade-off. You'd be paying the loan for 2 decades longer, and more years of payments means a lot more interest paid overall. Critics have been quick to point out that what you save each month, you more than give back in the long run. They're not wrong. Because the loan is so much longer, the total interest a homeowner pays would skyrocket. For example, one analysis estimated that a borrower would pay roughly $389,000 extra in interest over the life of a 50-year loan compared to a standard 30-year. That's nearly double the lifetime interest in exchange for those lower monthly bills. It also means building home equity. Actual ownership of the home happens much more slowly. With a 50-year term, it could take 3 decades just to accumulate $100,000 in equity, versus maybe 12 years with a 30-year loan. It's no surprise then that the idea is getting a lot of pushback. Even some of President Trump's staunch allies have balked. Congresswoman Marjorie Taylor Greene blasted the 50-year mortgage proposal, saying it would ultimately reward the banks, mortgage lenders, and homebuilders while leaving people in debt forever, in debt for life. Right-wing commentator Matt Walsh put it bluntly: "This just means your house will be owned by the bank until you die, and after, we don't need 50-year mortgages." Those are strong words coming from Trump's own base. Financial commentators are raising red flags as well. Fox Business host Charles Payne, for instance, ran the numbers on a $500,000 loan and found that a 50-year term would nearly double the total interest paid, roughly $360,000 with a 30-year versus almost $700,000 with a 50-year. A gargantuan difference that he argued is not the way to do this. Economists also emphasize that stretching loan terms won't fix the root problem. There aren't enough homes. Extending mortgages doesn't create new houses. It may simply let more buyers chase the same limited supply. Redfin's chief economist pointed out that a more effective long-term solution is to fix the supply side. In other words, build more homes. If longer loans just boost demand without more construction, they could even push prices higher, canceling out affordability gains. Some places are already trying to address this by easing building rules to get more homes constructed. Many experts argue that kind of approach is what's really needed, not a 50-year loan.